We were talking a little bit about the market and demographic and the uncertainty. So, of course, like I said, the Bank of Canada, as of April 16th, held rates. Do you have any forecasting? Are you in the forecasting prediction game?
I am not.
But nobody should. But do
it's
some of your mentors, perhaps, or leaders at Brokerage, have they shared some what they believe might be happening in the market? Because again, nobody knows. I have my sense. I share my sense, my 2 cents on the market, and provide as much counsel and advice as I can from the data that's being produced, bond yields and the curves on the yields and treasuries in the U.S. But is there any, what's your thoughts on?
I mean, my personal thoughts are that, I don't think we're at the bottom just yet in terms of rates and, what's going to be happening with the Bank of Canada, but I don't think that we're far off from it. Okay. And the reason behind that is just, I don't believe in the notion, and I've said this from, prior to the rates being decreased over the past, 8-9 months. Yeah. We don't want to repeat what we just experienced, right? So by bringing rates all the way down to the high 1s and low 2s, I don't think that there's any benefit in it.
Oh, those are not going to be around for a long time.
Exactly. And the norm prior to those ultra low rates was around that 3-ish, mid 3s, low 3s.
So let me peel back that onion a bit more. So from 2002 to about 2007, before the financial crisis, rates, believe it or not, were 5.5%, 6%.
Yeah.
Okay. But property values were
lower,
half of what they were. Right? Yeah. Financial crisis hit, rates dropped. Rates were low in the 2.99 range to 3.5 range for a long while. Then you had BMO who came out with a 1.99 rate, and then I think HFD came out with 0.99. This is all from 2010 to 2019 or thereabouts. Before COVID, here's the interesting part. Rates were already getting to the 3.8 to 4.2 range. People were really nervous about that. And then, of course, COVID, they dipped and then they went this way. But to your point, normalization will be maybe low 3s to low 4s. I think is where it's going to, and I think that's
which is where we are right now.
Yeah. It's in a lot of cases, depending on the products and depending on the transactions. There's 3 buckets, as we talk about with rates, that people get sort of slotted into. So that day of one rate for everyone just doesn't exist.
Exactly.
But it's interesting about how it's going to sort of normalize, and I think that's healthy for the economy.
Agreed.
And here's something I've also said before: clients will typically only care about rate because there's a lack of value or there's an absence of value. Now, what I mean by an absence of value, whether it's the value you're providing, whether it's the value of the product, people only will choose rate or focus on rate because there's an absence of value. And I think that's super important. The fact that you're being mindful of that. And that's good just for our young listeners. Those who are, again, maybe just starting out. Somebody that's, in their 20s and they're trying to gauge, how they're going to navigate the industry. If I could make a recommendation, it would definitely be make sure you focus on meaningful, valuable conversations.
Agreed.
Because a lot of the things that people want to focus on is just rate and do yourself a disservice. And you're not doing any kind of service to the client. And even if they started, I think it's our responsibility to help them steer away from the rate.
And just understand all the implications. I mean, over the past, I think, 2 years, the most common rate obsession downfall. There was some specialty products where you can get an ultra low rate compared to all of the lenders for 6 months. Right. And then after that 6 months, you're getting an inflated rate for the remaining however many years, or you're paying a very hefty penalty to leave that lender. Right. I have not put a single one of my clients in this product, but I've had a numerous amount of people who got put in that product by other brokers have reached out to me afterward because they're like, well, how did I not know? And I'm like, well, first of all, the onus is on whoever your representative was that told you about this product in the first place, because this is not something that is just known by the general public. Someone brought this to you and they didn't educate you on the full extent of this product. And now you're in a position where you regret taking it. Let's call it a 0.5% discount that you may have gotten wasn't worth it in the long run, because now you're facing a percent higher than what you should have access to for an extended amount of time, or a large penalty out of pocket that needs to be paid. Right. And again, having the larger focus on not just rate, because not to say that rate isn't important, but on all the other aspects and all the other implications of what it is that you're actually signing up for versus what else is out there.
Right. And, the other thing to be mindful of, a client who's going to save, let's say, $5,000 over a 5-year period, if they're not being told or talked about the value of another product that could save them 20,000, it's not the rate you're getting, the difference that is going to prevent you from save on interest or pay more interest. It's how it's going to all work out in the long run.
Yeah. In terms of saving money, I had a situation where someone's closing on a pre-construction, as you know. Yeah. That's going to cause stir for appraisal. Yeah. And there was a difference of, I think, maybe 0.2% on the interest rate. One lender was requiring that appraisal, and the one that had the slightly higher interest rate was not. And we were not confident in that property appraising, right, which would have then cost that client a whole large lump sum more of down payment, because that would have been a reduced mortgage amount overall. So that is a huge example of, not glorifying or over obsessing over interest rate when you have to look at all the other value adds, especially when we're looking at things like path of least resistance. Yes. I can't stress enough how important it is to provide clients, even our partners, our friends, with counsel and advice. The industry no longer should accept order takers and paper pushers. It just shouldn't. There's a lot, because they don't get the support, they don't have the confidence, they don't have the understanding, they're chasing money. Remember, money always outruns you. So those are things, the industry needs as a whole. Mortgage broker industry, the real estate industry, the financial advisor industry, everyone, especially during uncertain times like Roy and I are chatting about, they need counsel and advice, not paper pushers and order takers.